How's it going, everyone? My name is Nick Benedetto, and today I'll be talking about a topic that is actually pretty interesting and I think everyone should know if you're just getting into finance, or maybe you haven't really known this throughout your life, but it's a good thing to know, and it's actually changing. It's your credit score. So the way your credit score is actually calculated will be changing in the near future. So one of my favorite YouTubers, Stephan, actually put a video out today titled "Why Your Credit Score Might Drop Soon, Breaking News." And I gave it a watch, and I wasn't planning on putting out a video today, but I figured I'd do a reaction video to his video. Just to give you guys the basic knowledge of how credit card scores are calculated and what basic things you guys should be doing with your credit cards to maintain that score and why it's important. So yeah, his video actually goes into how the credit score is calculated and how it's changing from how it used to be calculated before. So let's go and give it a watch.
Alright, so let's get started. You guys can see I have why your credit score might drop soon, breaking news up. This video is released today, filming January 27th. So let's give it a watch.
What's up, you guys? It's Graham here. So I very much feel like the drama alert of personal finance, except we're not talking about the Logan Paul and KSI fight or the relationship status of Jeffree Star. Oh no, we got much more important news to cover today, like the new changes coming to your credit score and the new scoring method that will determine your fate with getting credit cards, borrowing money, and smashing the like button for the YouTube algorithm.
Interesting intro. Don't know about that first part with Jeffree Star, but I do agree with him. You guys should go down there and hit the like button right now. It helps with the YouTube's algorithm, and it actually allows more people to see this video, which is great.
Is that okay? Did I do okay on that?
Yes, Graham, you have made the algorithm very happy.
He's big on the algorithm, so he has 1.4 million views, or I'm sorry, not views, subscribers. He has 1.4 million subscribers, so I think I'm gonna listen to him, and I'm gonna tell you guys one more time to hit that like button and hit that subscribe button.
But seriously, back to the topic of this video. It's estimated that this change will impact roughly 80 million people, with roughly 40 million of those seeing their credit score drop by at least 20 points. So anyway, let's not wait.
80 million people could be affected by this change, and half of those people could see their scores drop. That's kind of crazy.
Waste any more time, let's go over exactly what these changes are, how it affects you, and most importantly, what you could do about it. First and largest factor.
Okay, so if you're not going to listen to anything else in this video, you should listen to this if you don't already know these things that go into your credit score. It's really important, and it'll set you up for the future of what your strategy will be for managing your credit cards and other loans.
Factors based on your on-time payment history, which makes up 35% of your score. This means you always pay your bills on time as agreed without ever being late or missing a payment.
Alright, so this is one factor that should never be a problem. Any bill, any credit card bill, any loan, any payment you should put on auto pay.
The second largest factor is what's known as the amounts owed, which makes up 30% of your credit score. This is otherwise what's known as your utilization rate, which means how much credit you have available to you versus how much of that you actually use.
So just reiterating the things he just said about the amount owed, the utilization rate, as some people call it. As he said, it's the ratio of how much you're spending versus what your credit limit is. So that's why in my first video I mentioned I wish I got a second credit card a lot earlier. Because I just got my second credit card and it raised my credit limit by about like $13,000. So once I got that second credit card, I raised my credit limit by more than double, and that allowed me to get my utilization rate down because I have a higher credit limit.
Your credit, which makes up 15% of your score. Overall, lenders see that the longer you've had your credit open for and in good standing, the higher the chances are that you will be a responsible, experienced borrower. And that is obviously good, so that will increase your score.
So this is another thing, kind of goes back to what I just said. Try to keep opening these accounts that you know you'll need, know you'll use earlier, because if you wait like I did for my second credit card, 5-6 years after your first one, it then effectively is cutting your age of credit in half, because now I have a new credit card. It's only been open for a month, so that pulls my average age of my credit accounts down. So you want to keep that higher. You want to keep opening up credit while you're younger so it can build throughout your whole life.
Fourth, we have the types of credit you have available, which makes up 10% of your score. This means that lenders want you to have experience handling multiple types of loans, just so you could prove to them that you're a financially responsible adult who don't need no credit.
So another thing with this one, mix of credit, if you're young like me, you might not have a lot of ways to actually open up these credit accounts. So credit cards is the easy one. Say you have 1 or 2 credit cards, you're starting out, you don't want to apply for another credit card because you're going to get a hard inquiry. We'll go over that in a little bit. But other things you could do, say you need a car, you can always get a car loan. If you're going to buy it in cash or want to buy a car in cash, I honestly would recommend not buying it in full. You can put a very large chunk down, maybe like 80-90%, and then get a loan for that last 10% so you have another credit account. So you're paying that loan, it'll be super small, but it'll show that you're making credit payments and that banks will actually trust you because your payments are on time and in full in another account besides your credit account. So another type of credit you could do is student loans. So if you don't have student loans yourself, I would actually recommend refinancing your parents' student loan. So if like they have a loan paying for your college, you can refinance it into your name at usually a lower interest rate, and that'll give you another credit account, and it'll add to your mix of credit right here, 10%. So.
We got the remaining 10% of your score, which is how many credit inquiries you have on your report. See, anytime you apply for a new line of credit, whether it be a new credit card or a loan or maybe a mortgage or maybe you just get pre-approved for something, it shows on your report as what's called a hard inquiry. And generally speaking, the more hard inquiries you have, the lower your score will be, because lenders see this as you actively going out to try to seek new credit and new loans, and because of that, lenders see you as a potentially riskier borrower. After all, why would any financially sane adult open up 3 new credit cards in 1 week? Besides to get the bonus points for free travel, by the way, but none of my business. Anyway, we could use.
So actually what he just said about the opening up credit cards for the bonus for free travel, I'm actually right in the process of doing that right now. I plan on flying out either to LA or San Francisco for free. So I'm gonna get 2 round-trip tickets for free just for opening up a credit card, and I'll go into that in a later video.
Utilize all of this information to our advantage by doing our best to keep hard inquiries to a minimum, making sure we never pay our bills late, keeping a low utilization rate, always keep our accounts open as long as we can, and keeping a good mixture of credit. Some people tell me they have a credit score that's 810, even though they've only had 2 credit cards open for like 12 years and have only paid on time, versus someone else who's had like 7 credit cards with really high limits, who's always paid on time for 20 years with 2 mortgages, whose score is somehow like 775.
So one thing I want to say on this point is you saw how he gave those 2 examples. One's above 800, one's under 800, with differing, scenarios in their lives. I've really heard anything over a 760 or maybe even a little lower. It's basically all the same thing. After a 760 credit score, I think the high limit of credit scores is 860. So anything in that 760 to above 800 range, you're going to get basically the same amount, the same interest rates on anything you're buying. So like if you're getting a car loan, your interest rate isn't going to be any lower at an 860 versus a 780 per se. Maybe a tiny bit, but not really much. So it's nothing really to worry about once you're over that 760 score limit.
Let's enter the world of the brand new FICO scoring method, just announced a few days ago, and that's what's called, wait for it, FICO 10. The biggest change here is that FICO 10 will be able to look back into your past spending habits for the last 24 months and with.
All right, so these are now the changes that are going to be made to the FICO credit score method. So we just went over all the current ways that your credit score is factored. Now we're going to see what's changing.
That information determine whether or not you're a riskier borrower.
So this goes back to the whole credit utilization thing. So now that FICO can see 2 years of your account history, you definitely want to be keeping that ratio lower, rather than going out and maxing your credit limit. And if I do spend a large chunk, I try to make a payment before my statement actually comes out, so it doesn't count towards your credit utilization score, your ratio you have.
Second, the new FICO scoring method will be able to see if your credit usage is increasing over time.
Okay, so I'm not going to spend a lot of time on this. This is basically just saying that they will see if you're using your credit cards more, and they'll see if your limit not your limit. They'll see if your spending is increasing on your cards.
Now, third, on a good note, because not all of this is bad, but FICO actually made an improvement to the credit scoring system and will no longer be penalizing you for carrying a one-time high balance or for one time just maxing out your accounts.
Okay, so this is actually a really good feature that I like that they've added. So I'll give you a good example. So I just moved into this apartment, and if you watched my last video, you saw that I bought all this furniture for a couple $1,000s, and then there were some move-in fees and other things like that. And I actually put it all on a credit card for the reward points. But in this new scenario, high balances, so like say I had a credit utilization percentage of 50% of my credit limit. That would reflect poorly on my score usually, but in these new cases, they'll see, oh, it was only that 1 month that it was high, maybe because of a move or holidays or something like that. So your credit score will not be penalized in those cases, which is great. So this really seems like the changes are more of looking at your history from a longer term to get better habits and patterns of life of the credit card users. All right, so now if you guys didn't know what made up your credit score, now you know, and now you know the changes that are going to be coming in the near future. If I were to guess, I would say these changes won't really be implemented in 2020, and you'll start actually seeing these changes reflect in your credit score starting 2021 and down the line, because things like this to implement in large systems take a pretty long time. So yeah, that's a lot of good basics to know for credit cards and credit in general if you didn't know before. And give Stephan a follow. He has really good videos on personal finance, budgeting, real estate if you want to get into the real estate business. So yeah, that's all I have for you guys, and I wanted to give you guys one last reminder to hit the like button and subscribe. And I'll actually link in the description my schedule that I'll be putting out. So I'll be putting out videos every Thursday and Saturday, and the times for those postings will be in the description also. And then some Tuesdays, I'm thinking every other Tuesday. So make sure to hit the subscribe button, hit that little alert button so you can know when my posts are coming. And yeah, that's about it. Have a good one.